and welcome to CATEX-TV. I'm Tom Bailey in London. It's 4:30 PM in London, 11:30 Eastern Time and 12:30 in Bermuda. Today in history. Today in 1669, Mount Etna in Sicily erupted, killing 15,000 people. Today in 1974, Mount Etna erupted in Sicily. My advice is to anybody near Mount Etna, keep away on the 11th of March. And today in 1953, an American B-47 accidentally dropped a nuclear bomb on South Carolina. Luckily the bomb didn't go off because it had 6 safety catches, but quite a scary thought. And finally, today is the birthday of Robert Murdoch, the Australian publisher and owner of almost all news networks. He doesn't yet own CATEX-TV, so we're still independent. And now to the news. Last month's 8.8 magnitude earthquake in Chile has now been estimated to cost insurance companies between $4 billion and $7 billion. Zurich-based Swiss Re said yesterday that it expects to receive claims totaling $500 million. Swiss Re pointed out that purchasing earthquake insurance is a common practice in the seismically active Andean nation, and that even policyholders whose property was unscathed could file claims for interruption of business activity. The death toll from the tremor is near 500, and 2 million people were injured or displaced. Now, we don't really tend to see tropical storm activity at this time of the year, but in the Western Pacific, very near the island of Madagascar, we have Tropical Storm Hubert. Tropical Storm Hubert has sustained winds of 35 knots. These are anticipated to ease within the next 24 hours to 30 knots, at which point the system will be downgraded to a tropical depression. Obviously, it's very unpredictable. There are warm waters in the Western Pacific at the moment, so we'll keep you informed of that as it goes through. Hanover Re has come in with some good results for the 2009 year. It said it was very pleasing results for 2009, and the insurer said that these are the headline numbers. Overall premium was up 26.5% on the previous year. Combined ratio in non-life reinsurance was 96.6% compared with 95.4% for the previous year. Investment income was up sharply at 1.1 billion euros compared to 278.5 million for the previous year, so that's up nearly fourfold. And operating profit, or EBIT, passed the billion euros for the first time. Group net income was 723.2 million euros. Earnings per share €6.06, and the return on equity was an impressive 22.4%. Ulrich Wallin, chief executive for Hanover Re, said that for the first time we succeeded in generating an operating profit in excess of 1 billion euros. We also increased our shareholders' equity by more than 30%. So congratulations to Hanover Re. Chartis UK Chief Executive Lex Berg has been appointed to the new role of President and Chief Executive of Chartis European Holdings, which includes Chartis Insurance UK, Chartis Insurance Ireland and Chartis Europe SA. James Shear, currently Regional President for Chartis CECIS, will become the Managing Director of Chartis UK and will be responsible for the operation within the United Kingdom. Berg will oversee the regional operations of Chartis in the UK, Ireland, Continental Europe and other EU countries currently part of Chartis Central Europe region. Chartis said the move will facilitate a pan-European solution for the preparation of Solvency II. International Insurance and Reinsurance Group Brit has announced the establishment of its new office in Australia, replacing its previous third-party agreement. The new office is situated in Sydney's financial district and will offer local representative services for the firm's reinsurance activities. At the same time, Brit has announced the appointment of Mike Davidson as Managing Director in Sydney, a post he will occupy with immediate effect. Davidson brings with him extensive knowledge of the Australian and New Zealand reinsurance markets. In his new role, he'll be tasked with promoting Brit insurance throughout the region, handling present relationships and looking for opportunities for the firm to seize. And now news of an appointment in the London market. UK-based insurance services provider Charles Taylor Consulting has appointed Mike Peachy to the newly created role of Group Chief Risk Officer. Peachy was previously Chief Executive of CTC Axiom. CTC bought Axiom last year in a deal worth up to 7.85 million. His replacement at CTC Axiom is Stephen Card, who joins from independent Lloyd's broker R.L. Davidson, where he was for the past 12 months Deputy Chairman. Before that, Card was Chief Executive of THP International and Chief Executive of PWS. Nephelia Capital, the Bermuda-based group, has attracted around $340 million from 11 UK institutions into its catastrophe reinsurance fund for the second half of 2009. The company is an investment manager specializing in insurance-linked securities such as cat bonds. Nephelia now has a total of $2.6 billion in assets under management, according to a report by Hedge Funds Review. Investors who put their money into catastrophe bonds get an attractive rate of return unless a payout is triggered by a prescribed sum in insured losses relating to a particular risk, such as Florida hurricane or a California earthquake. The downside is that investors can be wiped out if a catastrophe occurs. And then finally today, it's a name you may not have heard before, but certainly one that we'll all become familiar with. Ironically named Carlos Slim. He is now the world's richest man, and he doesn't bother with private jets. He shuns flashy offices, and for most of the 1990s he made do with a plastic watch. While he does have a laptop, he's adamant that he doesn't use it, saying, "I'm a paper man, not electronic." Wow, it's incredible. Not the kind of attributes you might expect from someone who's now been named as the richest man in the world by Forbes. Mexican tycoon Carlos Slim is now worth $53.5 billion, which is in sterling £35.8 billion. That puts him above Bill Gates and Warren Buffett, but unlike his US rivals, he remains relatively unknown outside his native Latin America. There he controls more than 200 companies. These range from telecoms, where he first made his fortune, to infrastructure, banking and retail. In order to maintain his influence over his expanding empire, his sons and son-in-laws have been put in charge of many of the businesses. One of the most significant in Mr. Slim's empire is America Móvil, Latin America's largest mobile phone company, which operates in 11 countries and serves more than 150 million customers. His telecoms interests also extend to Telmex, the company he fought to take control of in 1990 when it was nationalized. It now operates around 90% of Mexico's telephone lines. Mr. Slim, whose heavy-set figure belies his name, also owns Inbursa Financial Group and Grupo Carso, industrial conglomerate, whose interests range from retail stores to restaurants. Meanwhile, the infrastructure firm he owns, Ideal, is working on a project to develop a shopping center, schools and a hospital in Mexico City. Well, very, very impressive indeed. He was the son of a school teacher, and he's made his money himself. It's a good story to end with. Thank you very much indeed. We hope you'll join us the same time tomorrow. Until then, thank you very much, and goodbye.